Welcome to your daily health report for the Plasm Protocol. The defense is holding strong, but let's be real, the biggest stress tests are still just around the corner. Today, we're tracking exactly how the system is performing as it navigates this really critical unlock period.
Okay, before we get into the nitty-gritty for day 84, you know the drill. This is all for educational purposes. It is not financial advice. All right, with that out of the way, let's get into it.
So here's what's on the agenda. We'll kick things off with a market snapshot for today, then we'll stare down this coming release wave, we'll talk about navigating that extended pressure, break down the token supply, and then dive into the protocol's $70,000 defense system and, of course, the Perpetual yield engine that powers the whole thing.
All right, let's start with the day 84 market snapshot. And really, it's a green day right in the middle of all these unlocks. We've got about 7 hours left in this epoch, and honestly, the picture is looking surprisingly positive. It's showing some serious resilience.
And just take a look at this. Both Plasm and Eshare are solidly in the green. We're talking Plasm up over 6% and Eshare up more than 7%. This is a really strong sign of market stability, even with all the unlock pressure in the background.
But that positive snapshot, as great as it is really only part of the story. The real test, the thing we all need to be watching, is the coming wave of token releases. You could call it the approaching storm.
Now, today is actually pretty light. We're seeing just under 173,000 Plasm tokens unlocked. That works out to a little over $10,000 in potential sell pressure, which is a very manageable amount for the system.
But today is kind of the calm before that storm. So the real question becomes, what's on the radar for the next 7 days?
And whoa, there it is. Just look at this chart. Tomorrow, on day 85, we see this absolutely massive spike. We're talking over 500,000 tokens unlocking in a single day. You can see that after that, the pressure does begin to taper off a bit, but man, the next few days are going to be intense.
So if you add it all up, the protocol is getting ready to absorb nearly 2 million new Plasm tokens in just the next 7 days. Tomorrow is, without a doubt, the key stress test.
And you know, that 7-day view is just the beginning. To really understand the challenge here, we need to zoom out and look at this as a whole, as a long-term campaign. This timeline really lays it all out. So after tomorrow's massive peak, you can see there's another pretty significant release coming on day 94. And this elevated pressure, it doesn't just go away. It sticks around all the way through day 117 before we finally see some real relief and daily unlocks drop below 55,000 tokens.
And honestly, this is probably the single most important thing to get your head around. This is not a one-and-done cliff event. It's a prolonged, sustained period of pressure. The protocol was built for exactly this kind of marathon, not a sprint. Okay, so now that we understand the pressure we're up against, let's analyze the current token supply and see where the potential risks and strengths really lie. Let's find out who holds the keys.
When you look at the supply distribution, you see this really key dynamic. Half of the supply is liquid, and that represents potential sell pressure. But balancing that out, you've got a very strong 31% that is staked, which shows some serious long-term holder conviction. The rest is either providing liquidity or has been burned. And to put that into hard numbers, that's over 2 million liquid tokens on one side of the scale. But on the other side, you've got over 1.2 million staked tokens acting as a powerful counterbalance for the protocol's long-term health. That's a big deal.
So, knowing that this pressure is sustained, let's take a look at the fortress walls. Let's see the active defense systems the protocol has in place to maintain stability.
So how does the protocol defend itself? Well, right now, it has over $70,000 sitting in its automated defense pools. These are programmed to provide continuous buy pressure on Plasm, day and night. And here's the breakdown of that arsenal. You can see there are 4 pools deploying capital at different rates. But the key thing to notice here are those USDC pools, because since they use stablecoins, they are constantly being replenished by the protocol's yield engine. And that brings us right to the core of the protocol's strength. Let's talk about the engine that powers these defenses, the thing that ensures they never run dry. This engine is powered by a vault that's holding nearly $400,000 in Ethereum. And this isn't just sitting there. It's actively deployed to generate a constant stream of yield. The engine does this by owning almost a quarter of all DeFi bonds, which are DeFi instruments that earn trading fees. And so far, it has generated over $53,000 in pure profit, which is then piped directly back into those protocol defenses.
And that's the beauty of it. The engine just works, non-stop, turning market activity into automated buy pressure. For example, when someone trades on the platform, a portion of the fee goes to the engine, it gets converted to stablecoins, and then it's used to buy PLAZM off the market. It's completely independent of the unlock schedule or the token price. It just keeps working.
So, after reviewing the market, the release pressure, and the defense systems, what's the final verdict for day 84?
Our verdict for day 84 is cautiously optimistic. The protocol is doing exactly what it was designed to do under stress. The price is holding up, the defenses are funded, and the yield engine is running. But patience is absolutely key because the biggest releases are still on the horizon.
The biggest immediate test is tomorrow, with that massive 549,000 token release. We'll be right here to analyze how the system performs under that maximum pressure. So, stay informed, stay patient, and remember, the yield engine never sleeps.
And just one final reminder, this is experimental technology, and cryptocurrency investments are high risk. You could lose all your capital. Always do your own research and never invest more than you're willing to lose.